All right, there you go. Hey, what's up, guys? What's going on? Welcome to the class. So here's part two of hopefully a five-part thing for the week. Um, but yeah, I'm gonna wait for everyone else to join up. All that good stuff. Let me make sure I put it out here on my YouTube. Give me 1 second, guys. Let me go ahead and make sure this is all good, and I'll start up the screen share. But in the meantime, let me start up right here, guys. But what's going on? What's up? How do we all do today? How did we all do today? Here, let me go and open up my YouTube real quick. Make sure this is all good. Oh, let me see. Okay, yeah, we're good. We're good. Okay, perfect. Okay, there we go. All right, what's up, YouTube? What is up, Discord? I'm seeing that you guys are joining one by one. What's up? What's going on? I hope everyone had an amazing day, cause we pretty much did. We caught some good trades here. So yeah, let's go ahead and get straight into it. So today, I'm sure you guys do know. Hey, what's up, YouTube? What's up, everyone on YouTube? What's up, guys? So I'm sure you guys know today, or yesterday actually, I ended up covering more of my strategy. Now, I'm not trying to do that part every single day because it's gonna get super repetitive. So I'm seeing a lot of heads in here that I did see yesterday. So I'm sure you guys understand what my strategy is. Now, I'm asking you guys right here on Discord and on YouTube, guys. How many of you guys really understood the strategy yesterday to the point? Because today I want to do more breakdowns on the trades that we took to get the 1 month winning streak, how I found them, and so on. So are you guys fine with doing that? We understand? Okay, so someone understands at least. Are you guys fine with doing some recaps and all that stuff? Just breaking down trades? Yes. Okay. Cool. And don't worry, if you guys are new, I know I'm not gonna break down the entire strategy. Like from head to toe, pretty much. But you guys will get the idea behind it, right? It's really easy, right? So we're gonna do it the same way like yesterday. Pretty much what we're gonna do is we're gonna do more. I'm gonna let you guys choose which trade you guys want me to kind of cover. Hey, what's up? What's up? And then we go from there, right? So what I'm gonna do is on both my YouTube and my Discord, I'm gonna give you guys a few seconds to choose what trade you guys want to go ahead and review. It could be the trade from today, which would be the most fresh one. I have two trades to review today from today's market, or maybe you guys might want something from the past, right? So I'll let you guys go ahead and choose. So you guys know the last month we've been green. I could do that one as the first one, right? I can't find your Discord here. Let me go ahead and send it to you, bro. It's right here, right here. There it is. There it is. But yeah, so I'm gonna give you guys a good second to go ahead and choose which trade you guys want. Some people were asking about today's trade. Which channel? Oh no, bro, you're watching on YouTube, bro. You literally see me on YouTube. Come on now. Sub Blast, I'm just here to chill and support. Hey, bro, appreciate you, my man. But yeah, let me check the chat here real quick. 916 today's trade. Okay, I'm seeing a lot of today's trade. All right, so we'll start with today's trade. And then as we finish, we'll go from there, right? Why only 7 points? Because ES is different from NQ, bro. So 7 points on ES is like 70 on NQ. It's completely different. It's a different stock that we were trading. But all right. So what we're gonna do is we're gonna go ahead and review today's trade. It's a fresh one. I mean, we literally caught it today, like a few hours ago. So it's a fresh one. It's gonna be really easy to understand. I'm gonna show you guys exactly how I found the levels, how you guys can find it, and how you guys can go about it. Right? It's really simple. So let's get straight into it. All right, guys. So what we're gonna be doing is first and foremost, for the people that don't know, the trade that I ended up catching. Let me see the chat. How long did it take for you to get 10 PA accounts once you master your setup? Honestly, like 2 weeks. Like 2 weeks. But anyways, and by the way, guys, if my mic is cutting, just restart the stream on YouTube. It should fix it. All right. But anyways, all right. So for those that don't know, the trade that I ended up catching today was a 95. Was it 80 points or was it 95 points? I think it was 95. Yep, 95 points. So yeah, for the people that don't know, I ended up catching a 95-point trade today with the premium. I live traded all of it, not in this server, but for the people on my YouTube, you guys know. By the way, guys, once again, for the people, if your audio is cutting out on YouTube, just restart the stream. It should fix it. All right, guys. But yeah, so for those that don't know, we ended up catching a very nice 95-point trade on NQ. And I'm gonna show you guys exactly what levels I had, how I knew the market was gonna reverse after. I'm sure you guys saw it, the huge dump that the market had. I'm pretty sure because of some more news. I don't know too much about it, but that's the whole idea behind it, right? So here is the trade that we caught. I'm gonna show you guys, like I said a million times, I'm gonna show you guys how I found these levels and how I knew exactly where and when the market was going to reverse so we can catch the absolute bottom, right? So let's get straight into it. So the first thing we need to do, I'm going to go ahead and ask you guys in the chat because I want to kind of like test you guys, all right? So let me ask you guys in the chat, what is the first thing that we, like, let's say we have a fresh chart, right? Which I'm going to go ahead and delete everything. right? What is the first thing we look for? Yeah, the trend, but there's something else I look for, right? That's aligned with the trend. Exactly, the drawn liquidity. Perfect, right? So someone's getting it. All right. So the first thing you guys need to be looking for is any time the day starts, or let's say for example it's nighttime and you're trading for tomorrow. The first thing you want to be doing is you want to start looking for drawn liquidity levels nearby for the next day, meaning that if the trend is bullish or if the trend is bearish, you will know exactly where the market will go to by using these levels of liquidity. So for example, today, right, I'm gonna go ahead and rewind this before the market dumped, right? And by the way, hold on, let me turn on my air because it's really hot in my room. Hold on. Alright, I'm back. Alright, so it could be any time frame, by the way. Any time frame. So what we're gonna do for the people, before you guys ask about the time frames, you know what time frames you guys look for and all that good stuff, I'll go ahead and answer that question for you guys. Alright? So pretty much what this is the first thing you guys always do before the market opens, or the night of, you know, like the night before you guys are trading for the next day. What you guys want to do is always start on the higher time frame and slowly ease into the smaller time frames as you're finding levels of liquidity. Of course, on the higher time frame there won't be many levels, but there'll be very, very strong levels, right? Which is a good thing, right? And YouTube, you guys are killing it. I see drawn liquidity, DOL, good stuff, guys, good stuff. All right, so here's what we're gonna do. Right, the first thing I did yesterday before the market went ahead and, of course, you know, opened today, what I did was I went ahead and charted out all of the levels of liquidity nearby. It could be to the upside and to the downside, right? That's what we want to look for. So the first thing you guys always do is go on the higher time frame, like the 1 hour time frame, right? And you guys are going to be finding levels of liquidity. Now, I'm sure you guys, a lot of you guys remember the class from yesterday where I showed you guys exactly how to find liquidity, what it is, and how to identify it, and all that stuff, right? So I'm not going to review it too much. If you guys know, you guys know. If you guys don't, just watch the recording from yesterday, right? So here it is, right? So, you know, let's just say that the today hasn't started and we're charting for tomorrow, right? Or for today, you know. So the first thing we're going to do is we're going to go ahead and mark out the highest and the lowest points where the market has gone to recently. Super simple, right? So what we're going to do is simply just mark out this high up here, right? Just like this, right? So we have a liquidity at 20,538, which is pretty far, but you know, it's better marked out than not, right? You never know, right? The next level of liquidity is weak. Obviously, you can see that the market sold off, pulled back. It pulled back here, but keep this in mind, right? We took out liquidity right here, so we took this liquidity out right here, and we formed a new one, and we went even lower, right? So what we're gonna do here is we're gonna go ahead and mark this one out at 395.75. Now, this level is very important, not super important, but of course, it's a good one to have, right? Now hold on, let me drink some water. Okay, so the next one after this level is you guys are gonna be finding the next high before the next dump, right? So obviously right here the market went down, pulled back, but if we're talking real time right now, obviously we know that these levels right here, which they are levels of liquidity, they already got taken out in this high up here. So we're not gonna be marking this one out because it's not really validated. It already got taken out, right? So obviously we're not gonna be marking this one out. It's simple, right? The one that we're gonna be marking out is obviously gonna be this one, right? The one at 331.75. And sure, you guys can mark out this one as well, but I mean they're right next to each other, right? They're like what, like less than 10 points away. You might as well just mark out the highest point and go off that. But if you guys want to have more lines on your chart, you guys can mark out both this high and this high because they're so close to each other. But you know, I'd rather just have them as one level. It's so much easier, right? So to the upside, on the 1 hour time frame, at least on the 1 hour time frame, we have 3 levels of liquidity to the upside. Now keep in mind, as you go lower into the time frames, which you will, right, after you find all your levels on the higher time frame, you're gonna be finding a lot more levels. So don't think that we're just gonna work off 3 levels only. No, there's a lot more, right? So now that we went ahead and took out every level, or marked out every level of liquidity to the upside before, hey bro, thank you Marius, thank you my man, right? What we're gonna do here is before the market opens, now that we have the drawn liquidity to the upside, we want to start looking for drawn liquidity to the downside. And it's really, really easy, right? It's as easy as how we did to the upside. So what we do in this case is we're gonna go ahead and mark out, of course, the lowest point we could possibly see. Obviously we have one here, right, at 20,860, which is going to be a very, very, very important one. So keep this one in mind, guys, right? We have 2 more here, right? So you guys can mark out this one. You won't mark this one out because it got taken out by this wick. So if you guys look at the candle, you guys see that, yeah, it got taken out, right? So instead of marking this one out, we'll just mark this one, right? You guys can also mark out this one, but I mean, I would say they're pretty close to each other, right? Like what, like 20 points? It's a good one, right? If you guys want to have these 2 marked out, let's do it, right? So we have a low, another low, another low right here. Let's see if this one is a valid one, right? So if we mark this one up because it is a low, right? We found this low, market pushed up, pushed down, found this bottom, pushed even higher. But the reason why we're not marking this one out is because it already got taken out by this wick right here. So there's no point of having this one marked out. We'd rather just have the next one marked out, right? So what we're gonna do right here is just mark this one. Now I'm seeing a question in the chat. Let me go ahead and check it out. Okay, when there's two levels of liquidity close to each other, would it not be safer to choose the lower one in case? I mean, I guess, yeah, you could also do that. So yeah, if you want to be a lot safer with the level of liquidity, instead of marking out this one, you could just mark out this one. Yeah, I mean, it's the same thing, right? They're so close to each other that I'm sure both of them will get taken out regardless, right? Not always, but most times they will if they're so close to each other. Now, right here so far, by the looks of it, I mean, wait, there's some more liquidity, right? So we found this bottom, market pushed up, pushed down, found this bottom, and pushed a little bit higher. Not crazy high, but it did bounce, right? So right here, we have a level of liquidity just right here. Sure, you guys can mark out this one, but just like this level up here, they're literally right next to each other. So you can either mark out this one, or you can mark out this one. They're the same thing, right? So in this case, I went ahead and marked out 215 as drawn liquidity. Now, so far, on the 1 hour time frame before the market opened, we look pretty good. It seems like we have every level of liquidity marked out. So whether the market pumps up right off open or dumps down right off open, we will know exactly what levels to look for, what level to expect a reaction from, and etc. Right? Let me see. How do you make your cursor jump to the candles like that? Yeah, it's pretty easy. This magnet tool right here, double click it, click weak magnet. Right here, click weak magnet. If you have it off, what it's gonna do is when you're trying to mark out the level, it's not gonna like stick to the candles. You know what I mean? So when you activate it, it will stick to it like that. So you can have like the exact level. Sometimes it might be a little bit off. Yeah, exactly. So yeah, make sure you put it to weak magnet, not the strong one, the weak one, right? So far on the 1 hour time frame, it seems like we have all the levels marked out. We have every high, every low. But that does not mean that we have every single level marked out, because of course we're on the higher time frame. We filtered out the useless candles, right? So what we're gonna do in this case is, now that we found every level in the higher time frame, we're gonna slowly one by one move to the lower time frame, like the 1 hour, the 30-minute, the 15-minute, and then the 5-minute, and that's it. So, right? So let's go ahead and see here. On the 30-minute, let's go ahead and see if we have any other levels of liquidity that we should be marking out that we couldn't see on the 1 hour, right? And since the 30-minute and the 1 hour, since they're so close to each other, usually you're not going to find anything special, but there might be that one time that you might find it. So let's go ahead and look. So far, we have the same level above. We have a nice one here. The same one here. So far, this one is the same thing. Yep, same thing right here. Same level here. So far, so good right here. Yep, so everything on the 30-minute checks out, right? So we don't have to add any other levels that we need to add, for drawing liquidity. Now, let's go ahead and see if there's anything on the 15-minute time frame before we get into the market and start trading it, because you never know. There might be a level that you guys might need, you know what I mean? So, if we go over to the 15-minute, let's go ahead and see if we have any other levels, which I don't think we have anything so far. Let's go ahead and look. Everything looks good to the upside. The downside, we have this low right here. We could use this one, but it's not really that much of a strong bounce. Okay, right here, guys, peep this. On the 30-minute, you guys can't really see that there's any sort of bounce here, right? It just seems like a regular green candle, nothing crazy. But if you guys go over to the 15-minute time frame, you guys would realize that the market dumped, found the bottom, pushed up, dumped down a little bit, found this bottom, and pushed even higher. So this right here is known as a higher low, right? So it is a valid level of liquidity that we should be looking out for, just in case, right? So we're gonna do here and keep, like I said, guys, on the higher time frame, you won't see these levels. That's why I tell you guys, start on the higher ones, go one by one to the lower ones, right? Let me see. Do you clear your lines daily? Yeah, I do. Every single day at night before I go to bed, I take about like 10-15 minutes to mark out all my levels for the next day. So all I have to do the next day is wake up and just go off my day. I don't have to worry about any levels or anything because I marked it out the night before. So yeah, every single night I always delete my levels and I just redo them, right? And it gives you guys better practice at spotting levels and all that good stuff. Okay, so now on the 15-minute time frame, it seems like we found one level. I don't believe we have any other ones, but we could be wrong, right? So this one looks good, this one looks good, this one looks good. So yeah, we added one extra level that we couldn't see on the higher time frame, but it does look pretty strong. Why is that? Once again, guys, anytime the market makes a higher low or higher low or lower high, you mark out the high or that low. So in this case, on the 15-minute, you guys can obviously see that right here we have the low. We pushed up, pushed down a little bit like a mini pullback. We found the low and pushed even higher. So this level at 118.75 is a pretty valid level of liquidity. So we're going to go ahead and mark that out. Other than that, so far, it doesn't seem like we really have any other level to really be looking out for, at least on the 15-minute. Now let's go ahead and see on the 5-minute, right? I don't think on the 5-minute we should have anything crazy, right? Let me see. Yeah, no, the 5-minute looks pretty good to me, honestly. So, okay, now let me ask you guys. Let me kind of catch up with you guys. So far, so good. Do you guys understand exactly how and why I found these levels of liquidity? And I'm not gonna say. Yeah, let me just say that. Yeah, so far, yes, perfect. Okay, cool. So you guys are off to a good step, right? And I'm sure we all know how liquidity works, how we can react off them, and all that stuff. So now, all we need to do, our job now is we don't have a job. Well, we don't have to do anything. All we have to do now is kind of just let the market do its thing. Now that we did our job, which is spotting the levels of liquidity of the highs and lows and all that stuff, all we have to do now is step 2, the trend. I saw a lot of you guys were saying that, yeah, when the market opens, you guys should be looking for drawn liquidity, and you guys should be looking for the trend in the market, which is very, very correct, right? So now that we did part 1, which is the drawn liquidity, all we have to do now is simply just wait for the trend to form, and depending if it's a bullish trend or a bearish trend, all we need to do is wait for drawn liquidity to get swept, and then we wait for a reaction, and that's it. Right? So here's what we're going to do. We're on the 5-minute time frame, and obviously I'm sure you guys know that today was a pretty bearish day because of some more news that came out. I'm not too updated on that. I don't really care that much about it. But it did take a toll in the market. Obviously, I'm sure you guys know the market really dumped down pretty strong. You guys can see right here, market opened, and then boom, the market just died. Right? So what happens when the market dies super hard like this? Well, first of all, a good reason why the market is going down so much is to go ahead and fill those levels of liquidity to the downside. So you guys know that if you expand your time frame, right, we have drawn liquidity 1 at 20,015. We have drawn liquidity 2 at 118. We have drawn liquidity 3 at 40 or at 57, right? Yeah, 56. My bad. We have drawn liquidity at 56. We have drawn liquidity at 953, and we of course have drawn liquidity at 860. Right? So before the market reverses, not always, but what you guys would be expecting is when you have such a strong selling, like, you know, such a strong sell-off like this, ideally you guys would expect every single level of liquidity to a downside or to the upside if it's a huge pump up to go ahead and get taken out. So here's exactly how I personally managed to kind of snipe the complete bottom of the market today to catch a beautiful 95-point trade. So peep this. So look at this, guys. One by one, as the market opens, it's taking out every level of liquidity. I'm sure you guys can see this because it's going through every level, right? Now, based off every level, sure, you guys can expect a sweep and a reversal back up, but it won't always sweep just because it takes out one level. Maybe, we don't know this, but, you know, it's our job to react, right? We won't always know this, but anytime the market takes out any level of liquidity, even if it has any levels below or not, it could still keep going down. Right, but your job is to react off these levels and see if you can catch a nice move up and go from there. So right here, you guys can see that we took out 1, 2, 3 levels of liquidity, but we have, I'm gonna say 2 more. I'm gonna delete this one. Right, let's say that we have 2 more levels of liquidity to the downside because of course we see that the what's it called, that the market is selling off super hard. So right here, I'm gonna keep playing this and I'm gonna show you guys that the market kept dumping even harder. We took out another level of liquidity, but let's see if we can go at least into 860. Right? So let's go ahead and see. Look at this. The market keeps dumping lower, right? And we take out 860 right there, right? Boom. So now we just took out 860. And you guys remember, literally right now, in front of your face, we marked out every level of liquidity that the market had nearby. So in this case, with such a strong sell-off in the market, you guys can see that we really don't have any other level of liquidity to the downside. You guys can see that we have nothing marked out. I'm not saying that the market cannot go any lower, but in this case, when the market takes out every single level of of liquidity nearby, right, which the last one was 860, you're not expecting the market to go any lower because remember the bank concept. The whole reason the market was dumping down so much was because liquidity is getting filled one by one by one. Banks are getting filled at the absolute bottom, and they're stopping the retail traders, which is us. They're stopping us out, right? So I'm sure not all of you guys, but I'm sure some people might have been in longs today and you guys might have gotten stopped out. What that means is that unfortunately, you guys might have been liquidity. As much as I hate to say it, that's just how it is, right? So in this case, once again, you guys see that the market took out every level of liquidity one by one by one by one. Now, let me ask you guys this: what do you guys think the next step is in this type of setup? Now that we have the trend, now that we have the drawn liquidity, what is the next thing we should be looking for, right? Let me see. How's liquidity today, bro? Okay, so I saw someone say find the fair value gap, which is Hannah. By the way, Hannah, what's up? What's up? It's been a minute. It's been a minute. I haven't seen you active in the chat. But yeah, Hannah said find the fair value gap, which is one of the steps, but it's not the one that we're looking for. That's the next step after. Remember, well, actually, matter of fact, it depends how you go on about it. I'm not gonna say it's wrong, because it's not. It's definitely not. But before you look for the fair value gap, I've been moving. It's all good. It's all good. So look, Hannah, peep this. So you're not right, but you're not wrong. You know what I mean? Like, okay, look. When you're looking for a reversal in the market, sure, yeah, you should be looking for a fair value gap, because if the market reverses and you don't have a fair value gap, then you can't really trade it, right? So I would say you're right. Everyone here is right. For the people that are saying MSS and fair value gaps, you guys are both right. In my opinion, either or, you guys can do it in either order. As long as you guys are able to find both in a matter of time before the setup plays out, then you'll be fine. Right? But yeah, I'm seeing a lot of you guys type fair value gap, MSS. Yeah, so you guys are correct. So, in this case, you guys can see right here. So, let me ask you guys this, like a little quiz here. When you guys are looking for fair value gap on the 5-minute time frame on NQ, how many points should the fair value gap be? Let me see if you guys know this. 40, 40. Let me see one more. Okay, perfect. So a lot of you guys are saying 40, and you guys are correct. It should be more than 40 points. 40 points or more, right? So right here, this candle right here, if you guys know what a fair value gap is, I'm sure you guys know that this candle is a pretty good fair value gap, right? So in this case, and someone said 30. No, it's not 30. It's 40. It should be 40, in my opinion. I've had a lot better experiences with 40, right? So yeah, and then yeah, of course on ES it should be 10 or more. So in this case, you guys can see right here that if you measure this candle, it's about a 66-point candle, which is definitely more than 40 points, right? So it's a valid fair value gap, and second of all, we have a full selling candle. It's not a wicking candle that looks like this, for example. It's actually a full selling candle, meaning that there's imbalances in this candle that have not yet been filled. So what does it do? Well, it actually makes it a valid fair value gap. So now, in this case, what can we do off of this, right? So like Hannah said, we found the fair value gap. So what is the next step? Now that we have the setup, now we have everything, we're missing we're missing two confirmations, right? What do you guys think those two confirmations are? Now that we found the fair value gap and now that we have the setup, right? What are we waiting for in the market? Let me see. What do you mean displacement needs to be more than 40 points? I don't think I said displacement. I don't really trade displacements. No, not a close above. No, that's after. That's going to be when you enter. Right? Okay, so sweep. Right? Exactly. There it is. So those are the two answers that I'm looking for. Right? The MSS and the sweep, which are the confirmations like Moose said. Right? So, what are we exactly looking for here? Well, what we would want to see would be for buyers, since the market took out every... Well, not the market. The banks, matter of fact. Right? The banks, since they took out every level of liquidity to the downside, realistically, we really don't have any room to go lower. I mean, we took out every single stop loss. Ow, I mean, the banks got filled at the absolute bottom here. So, what does that mean? Well, if the algorithm is not going to keep putting out money in the market to make the market go any lower, why would it do that? It's kind of just, it's kind of dumb, right? So what we're going to do here is we're going to expect banks to start, since we already swept every level of liquidity, we're going to expect them to flip the trend from bullish to bearish, which is known as a market structure shift, also known as an MSS model, right? So what are we looking for here exactly? Well, let me go ahead and mark this out for you guys. Right here, you guys see that we have DOL, which is going to be this level right here, right? We have DOL just like that. Now, in this case, you guys see that after DOL, right, we hit the DOL and we took it out, but we have not swept it yet. The market is still bearish because we're not seeing any strength in buyers stepping in, right? So what we're going to do here is we're going to look for a DOL sweep. Keep in mind, we haven't gotten it yet, but we're looking for it. So how, you guys might be asking, how does a sweep look like? Well, it's pretty clear that you guys can see that there's a lot more sellers than there are buyers, right? And the one thing holding us down, or holding us from going any higher, is this 5-minute bearish fair value gap. So what are we looking for here? Well, what we're going to be looking for is to see if buyers can step in, right, which should be in this candle right here, you guys see how buyers are stepping in slowly. Look at it. Look at the selling candle. It's selling, strong selling, strong selling, strong selling, and so on. But notice this. Notice this. You see how the market, once it took out the drawn liquidity at 860, which is the final level below, notice how the selling candles get a lot smaller. Matter of fact, really small. Why is that? Well, like I said, the banks, they're not interested in pushing out more money into the market because they don't have a reason to make the market go any lower. Meaning that they're putting a little bit of a pause here in the market, right, on the selling, and they want to start flipping it to buyers, which is known as an MSS model, a market structure shift. Pretty much what it's doing is the trend of the market is slowly flipping, right? Don't think of it as like a sudden U-turn. Think of it as like, like a slow one, right? So what's going to end up happening here is the one thing holding us down is this 5-minute bearish rally gap, right? So if I continue to play this, you guys will see that out of nowhere, we start seeing a whole lot of buying coming in. Why is that? Well, guys, like I said, what the market is doing is it's selling off and it's taking out every level of liquidity to the downside and stopping everyone out, right? When people get stopped out, where there's a seller, which is us, getting stopped out, there's a buyer, which is the bank, right? Or the algorithm, or whatever you guys want to go ahead and call it, right? So what ends up happening is when every single person nearby gets stopped out and we sold our contracts over to the algorithm or to the bank or to the institution, right? They got filled at where they wanted to get filled. Think of it as like it was a mind game. The market dumped. Like, think this type of selling, us with our $1,000 in our account, we can't do this selling. We can't even make a dent in the market. So we know that this type of price action was the bank, right? The banks were scaring people out and stopping them out, right? And it's gonna get to the point where they stop them out, to the point where everyone gets stopped out and everyone sells their order out of fear over to the bank, and they get filled at the absolute bottom like a mind game. So once they get filled at the absolute bottom, this is gonna be known as a liquidity sweep. So what's going on here, right, is this candle right here, this green candle, is known as a DOL sweep, just like this. So it's gonna be known as a DOL sweep, right? Remember, we were looking for a DOL sweep here, we were getting it, and then boom. Look at this, guys. The market is a straight line down, right? You guys, look at this right here, right? Let me see. The market is a straight line down. We take out every level of liquidity. Notice how, look at this. We take out 1 level, 2 levels, 3 levels. Buyers start stepping in a little bit, but not enough. We take out another one, buyers step in a little bit more. We take out another one, and then buyers step in completely, right? So every level of liquidity that the market takes out, right, depending on how strong the sell-off or the pump up is, right, the more we take out, the weaker that direction gets. Do you guys see what I'm saying here, right? And this happens every single time. This is why you guys ask me, how did you know that we're going to bounce off this level and not this one? Because it depends on the volume coming in, right? So once again, as the market is selling off like a straight line down, the more levels of liquidity that we take out, the weaker the selling gets. So once again, look, selling, 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 we take out liquidity, it gets a little bit weaker right here, right? Look at this candle right here. It gets a little bit weaker, but not weak enough. So we sell off even more. We take out one more level of liquidity. It gets a little bit stronger, but not enough. We go even lower. We start seeing a lot more candles. We go even lower again to the final level of liquidity, and we go ahead and just completely reverse. So you guys see what I'm saying? The banks, they're stopping each and every single person out, and they're getting filled one by one by one by one, right? So go ahead, Wavy. What's up? Because I saw you put like a dot, like you want to continue your question, right? But yeah, that's pretty much the example, and this should make sense because honestly, I feel like this is the best way to explain it, which I really hope it is, right? Anyways, so what are we looking for here? Well, since we're getting the DOL sweep, what this is signaling is we're making a slow U-turn to the upside, right? We're making a slow U-turn. So think of this as like a U-turn back to the upside, right? So what's going on here is the one thing holding us down from going any higher is going to be this bearish 5-minute fair value gap. So all we need here is to inverse this fair value gap, show that buyers can form the MSS, which should be in this signal right here, right? This signal right here is showing you guys that the MSS has been formed, well, not has been formed, but is signaling that it could form, which is a very, very nice confirmation. So what we're going to do here is just simply going to mark this out as an MSS model, like this, MSS, right? Now, how do we play this? Well, just like Hannah said, now that we know exactly where our fair value gap is, all we need to do now is wait for a nice break above the inverse, or break above the fair value gap, the bearish one, and we take our long position. So how do we do that? Well, we pretty much entered right around here. I ended up getting filled around this range. We put our stop loss at 25 points, which is what I usually put it as, right? You guys can see right here in the alert. I ended up putting my stop loss at 875. So yeah, pretty much right here, right? You guys can see what I looked at during, as the market was open. And long story short, guys, what ended up happening right? Oh, and by the way, your price targets. How could I forget this, right? So we have our stop loss, we have the entry, but how do we find our price targets? Guys, look how easy it is. All you need to do is, first of all, you need to identify the trend in the market, right? We know that obviously the trend is a very, very, very bearish trend. So what we're going to do is every pullback that the market has as it's going down, that's going to be a new level of liquidity that we can then use to as a magnet or as a price target, right? So think of it like this. I'm going to go ahead and delete all these levels of liquidity because they already got taken out and they're not really all that important anymore, right? So let me go ahead and take this one out right here. Boom. Okay. So the first thing we're going to do is, of course, we're going to target the maximum possible price target, which is going to be up here for 400 points, which we're not going to see, right? So ignore that level. But we did reject off this, so it is a valid level of liquidity. Now, what you're going to do here is you're going to mark out the next pullback before the rejection, which is going to be this candle up here. You can see the market sold off, pulled back from this high, sold off even harder, pulled back from this high, marked this out, sold off even harder, pushed up, found this high up here, marked this out as drawn liquidity, pushed even harder, bounced up again, and so on, right? So these 5 levels, is it 4 or 5? It's 5 levels. Okay, so these 5 levels of liquidity are going to be your price targets for this trade, right? Now, a lot of you guys were asking me in the chat like, oh, hey, I missed my entry. Where can I really enter from right here? Well, guys, peep this. This inverse, which is where we entered from. Keep in mind, not everyone entered off of this. But let me see. Hold on. Let me read the chat. How many ticks is a point? It's 4 ticks. 4 ticks. So there's a chance of the market going lower after hitting drawn liquidity to another drawn liquidity, but there's another chance of drawn liquidity sweep every time. Yeah, there's a chance, but it's not always gonna happen. Keep that in mind. Keep that in mind. It's not always gonna happen. So if the drawn liquidity that you're looking out for, it already got taken out, but the market is still going lower, that's fine. Just look for the next one and look for the same reaction, right? Until you find the setup and the reaction. Yeah, perfect. Okay, so remember, guys, you guys know that we enter off of usually off of an inverse of a fair value gap. Let me see, Dr. Corey, break above or close above. Break above. That's what I do. I do break above. Right, so you guys know that we always enter off of fair value gaps. Now, with the market being in such a sell-off throughout this entire morning, of course we had more than one fair value gap. So let's go ahead and mark out the rest. Right, so you guys will see that right here we have a fair value gap right here. Right, because if you measure out the candle, of course it's an 88 point candle, so it's a strong one. Right, so you're gonna mark out this gap right here. Let's look for another one. Another one we have is right here, and another one that we have is right here. Right, so before I go on with the explanation, a lot of you guys were asking me today like, hey, I didn't get the first entry, where can I re-enter, and how can I catch the same move? And I told you guys, it's pretty simple. If you guys didn't catch the first fair value gap that we inversed, you can catch the next one, which is going to be this one right here, right? The last green candle didn't reach the target. It doesn't need to reach the target, bro. You need to reach the target when you're in the thing. And I never confirmed it. I kind of signaled it, right? I entered off this because of the deal wall sweep, not the MSS. Keep that in mind. But anyways, so right here we ended up taking our long position, right? And you guys can see that shortly after, we ended up hitting the price target, which is up here, in a few candles. Boom. So PT1 hit just like that. Right, so practically the trade, you can consider it done, right? But no, I'm pretty sure we go a little bit higher here, if I'm not mistaken. Let me see. I know I got stopped out of break even on my final contracts. No, actually no, I didn't. I remember now. Yeah, PT1 ended up getting, or PT2 ended up getting hit up here, which is when I alerted the 90 point trade, I think. Let me see. Yep, right here. Right, so you guys can see that, yeah, the price target ended up getting hit before we got stopped out of break even, and which resulted in a 95 point trade, 94 point trim, right? Let me see. Can you demonstrate how you trim? Yeah, 100%. So here's how I would do it, right? Because I'm gonna show you guys how to micromanage here, right? So we ended up getting our entry at 19,900, around that range. I'm pretty sure it was 19,908, but around that range, right? So what you do is simply as the trade hits your price target, you sell a portion of what you have. Of course, if you have one, you can't sell a portion. You have to sell the whole thing. But let's say, for example, you're trading with 10 contracts. You can sell half of your position, which is what I usually do at PT1. Right? Then what you do, let's say, for example, PT1 got hit up here. Right? What we're going to do is we're going to sell a good chunk of our position, which is going to be 5 contracts. Since we have 10, we're going to divide that by 2, which is 5. Right? So we're selling 50% of our contracts. So we're making money guaranteed. Right? What you're going to do right after is you're going to go ahead and move your stop loss from red to break even. Meaning that if the trade goes against you, which it did, right here, right? You will get stopped out at break even, which is fine. There's nothing wrong with getting stopped out at break even. The market won't always go your way. But you guarantee your profits because half of the position that you took above at PT1, you made those gains realized gains, right? So those profits are inside of your account. Now, if the trade goes against you right after, which is, it's normal, you would sell your remaining contracts for $0, meaning that you could have made a lot more if you held those remaining contracts and it went even higher, but if it goes against you, you're still going to be in a guaranteed profit, which is your job as a trader because your job should be to minimize the risk and maximize the reward. So how do you minimize the risk? Well, guys, it's as simple as this. You take trims at PT1, you move your stop loss to break even. If it goes higher, you make more money. If it goes lower, you don't lose money, right? So it's a win-win situation regardless. Sure, you might not make as much money as you had before, but you're still making money, right? So that's your job as a trader. It's not to catch every move in the market. It's to catch a portion of it and micromanage and go from there, right? So that's exactly what I did. Now, let me see. Can you trail the remaining contract? Yeah, of course, yeah. Of course. Bro, Ben, the 7-point trade, bro, it was on ES. It was not on NQ. 7 points on ES is a lot of points. You have to understand that. It was on ES. It was a different contract. 7 points on ES, look how much 7 points is. This right here, this sell-off right here, this massive sell-off. Okay, no, this was 20 points. A 7-point candle looks like this, like half of this candle, which is pretty good if you guys ask me. Let me see. Do you ever add to your position if you're confident in it? No. I add when I'm supposed to add, but no, I don't keep adding as it's going my way. How many pips was the first price target? It's not pips, it's points, because remember I'm trading futures. But the first price target was about 85, if I'm not mistaken. Yep, 85 points. Money is money. Exactly. But it wasn't 7 points on NQ. Don't get that confused. It was on ES. It's completely different. How many points do you usually aim for? Usually the minimum I like to do 40. But of course if I have to do any less, then sure, that's fine. Let me see. How many cons do you trim when you hit PT2? I trim 3. Okay, so here's how I do it. I always enter with about 10 contracts, sometimes 15, but usually 10. What I do is I do it by half, right? So if I'm holding 10 contracts, right, it hits PT1, I'm gonna go ahead and sell 5 of those contracts because it's half of that. PT2 gets hit, I'm gonna go ahead and sell 2 or 3, depending on how good the trade looks, right? Then I hold the final 2 contracts or the final 3 contracts for the rest of the remainder of the trade. And then if it hits price target 1 or break even, I'm out of the trade. You know what I mean? So that's how I do it. But yeah, now here's another thing, right? Remember when I told you guys about the re-entry part, right? I said this for a reason, because look, we ended up getting stopped out at break even, which is fine. We still made a shit ton of money off this trade. Actually, a lot of money from this trade, right? So look, for the people that didn't get the entry off of this part, what can you do? Well, the same way we entered off of this inverse, since we know that the market structure is bullish now because the market is creating higher highs and higher lows, right? After the sweep of the drawn liquidity and all that stuff, right? What you do here is you can enter off of the same fair value gap just a little bit above. Remember guys, we had this fair value gap that we have not inversed yet. So what we did here is you would have entered off of the breakout up here, right? Which looks somewhat like this. Let's wait for it right here. When does it happen? Let me see, hold up. Right, so the market took some time, but we finally ended up getting the break above, right? So you get look at how strong buyers look right here, guys. Look at this. We have a lot of buying coming in. Right, I'm gonna delete this level of liquidity. But yeah, we have a lot of buying coming in. So what you guys could do here is you guys could do the same exact thing. You wait for the break above, you enter off the break above, right? And then you target the remainder of the liquidity, which was at 20,078. You guys remember that level? right? 20,078, which would be your price target 1, right? So look how this trade would have played out. 2 seconds later, or a few minutes later, your price target will go ahead and get hit, right? So you guys had 2 chances to make money today off this strategy by timing the complete bottom of the market, and you guys would have made money, right? So this is the recap to this one trade right here, right? That's how I do it. Do you trade manually? Yeah, I do trade manually. Yeah, I do it manually. How many pips should the price move in my favor before I can move my entry to break even? In my opinion, I tend to move it after 30 points. But it's up to you. It depends how much you want to risk, right? It could be 20 points. It could be 15. No, actually, no. Don't do 15. Um, do like 25, 30, maybe 40, or maybe even when it hits PT1, you could also do that. But yeah, if you guys want to learn my strat a little bit more, yeah, because I'm seeing some questions here being asked in the chat, guys. It's all on my YouTube. Here it is. Here it is. Let me see. Here it is. So what you guys could do is, oh, there you go. I have a ton of videos right here on everything that you guys need. I have a lot of videos, matter of fact, where I explain everything on live trading, because you guys know I do live trading on my YouTube. I do my strategy, like these videos, and like classes like today. So it's all on my YouTube, guys. So if you guys need it, the link is right there, right? But yeah, now I'm gonna go get water real quick. But before I do that, I'm gonna do one more recap, because I really want to make this strategy super clear to you guys, because I want to give you guys the value that I wish I had when I first started. All right, guys. So yeah, I'm gonna leave this up. I'm gonna let you guys type in the chat, choose whatever trade you guys want me to review, and I'll go ahead and do that. In the meantime, I'm gonna go get water real quick. So I'll be back. Hold up. I'm back. All right, we're back. All right, let's go ahead and see. Okay, so let me see. Okay, we're back. Chat. All right, let's see what we have here. So, David, what you know about Lil Shimmy, bro? What? Yo, how do you know I listen to it, bro? Anyways, let me see. All right, so do you guys want me to review any other trade here that 917? I'm seeing a lot of 917s. Let me see what 917 what. Oh, bro, did I? Oh my. Bro, I forgot. I think I forgot to put it in the main screen, bro. I had it on the side screen. Guys, my bad. My brain wasn't like fucking thinking there. On the 17th, we caught. Wait. No, yesterday we reviewed the 11th. Okay, let's do the 17th then. Okay. So on the 17th, we caught a 160 point trade. Let me see which one that was. Hold up, guys. Give me 1 second. So on the 17th, we ended up catching. When was it? Okay, so we ended up catching. Let me see. 12 open. We were looking for a bearish trend. When did we catch this? Hold on. On the 7th. Let me see. Guys, give me 1 second. Hold up. The 17th. Roll right here. Okay, here it is. Let me see. Oh, it was a fair value gap trade. That's what it was. Oh, okay. That's pretty simple. So, would you guys want me to review this one, or would you guys want another one? Because this one's a little bit tricky, but it played out. Would you guys want that one? Bro, yo. The hell? Yes? Okay, perfect. Alright, let's do the 17th. Alright, let me go into it. Give me 1 second, guys. Let me set this up real quick. Oh, by the way, before anything. Hello, excuse me. What's your YouTube? Yeah, here it is. Before I delete this, guys, how many of you guys, like, did everyone understand the breakdown? Did you guys understand the draw liquidity trend, the draw, MSS for rally gaps, all that stuff? Do you guys understand that? Was it all good? Thanks. Got it. Perfect. All right, let's go over to the 17th. All right, let's do this. All right. So let me go ahead and go all the way back here. When was the 17th? Okay, we're on the 18th, 17th. So it should be right here. Right here. Okay, found it. Okay. So let's go ahead, and I'm gonna do more of a commentary type of thing here on the 17th, so you guys can get it more from when you're trading. Like tomorrow, bro. Tomorrow at 10 a.m. How many live sessions do you? What? How many live trading sessions do you log into? I don't get what you mean, bro. Any active discount for what? For what? Oh, premium. Do code trading. Do code trading. Trading, like you know, TRADING. It should give you a nice discount. But that's for mine. That's not for this one. That's for mine. And guys, same goes to you guys on YouTube, guys. If you guys, of course, are interested in joining, type code trading for either the lifetime or the monthly, and it'll give you guys a nice discount. All right, guys. But all right, let's get straight into this. All right. So in the premium, right? On the 17th, I went ahead and told everyone that we're looking at shorts because we're looking at. Wait, let me see if I even commented behind this. I did. Wait, no, I didn't. Hold on. Did I? Yeah, I did. Here it is. There it is. There it is. Okay. So I'm not gonna do like more of a chart breakdown because finding the levels is gonna take too long, and I'm not trying to be here for too long. You guys get what I'm saying? So I'm gonna do it based off what I sent to the commentary channel, and I'm gonna show you guys exactly how to read these channels, so you guys can of course make the most out of them, and of course make money out of it and learn something new from it. All right, guys. So let's get straight into it. Okay. So right off open at pretty much 30 minutes after market open, you guys can see that I went ahead and gave out a commentary saying that okay, looking at NQ coming into the market open, it seems like the bias seems pretty clear and easy to read. Now, why is that? Why do you guys say that why did I say that the bias looks so easy and clean to read? Well, let's look at this, right? So looking at the drawn liquidity level at 19,113, it seems like NQ took that level right off open, making it sweep that level. So if we look at the charts, you guys will see 19,813. We have a very nice level of drawn liquidity right here, which I went ahead and marked out for you guys right here. So we have drawn liquidity right here, right? This is the highest point the market has gone to before they rejected back down, right? Off open, you guys can see that we took out this liquidity and buyers are getting pretty weak. Why do I say buyers are getting weak? Well, buyers had the trend down here. Why do they have the trend? Because right here, you guys see the market from the bottom, and ever since then, we've been creating higher highs and higher lows constantly until we hit 813, which is the drawn liquidity before the market rejected. We went ahead and took out that level of liquidity, and it seems like sellers are getting pretty strong because we're sweeping liquidity. That's why I told you guys why price looks so easy to read, right? Hold on, I'm drinking some water because I'm really thirsty. I just spilled it everywhere. Okay. Anyways. Okay. So what I said here is what tends to happen. What tends to happen when we take out a strong level like this? Well, a sweep happens. That's what happens. Because when you have such a strong level at the highest possible point where you can find that level, right? The market ideally doesn't really want to go any higher. Banks don't want to push the market to go any higher because they want to go ahead and take out all of the liquidity and make it go back down, right? They filled all of the orders that they possibly could, right? So now it's time for the banks to control the market and make it go down so they can make money, right? So what tends to happen is an MSS forms off these sweeps and flips the trend from bullish. Wait, I said from bearish to bullish. I meant from bullish to bearish, right? I was waking up at this time, so ignore the typo. But anyways, what tends to happen is that the trend flips from being bullish, we sweep our liquidity, and we go back down bearish, right? So what I said here is we have drawn liquidity, we swept it right here, we're forming an MSS. I put a question mark because it's not formed yet, but we are forming it, right? And we have room to go lower into 632 and 529, right? So how do we play again around this? Alright, so with the trend going from bullish to bearish off the sweep, we can start expecting NQ to start wanting to fill the drawn liquidity to the downside that NQ created during the overnight session, which was in a bullish trend, which is why the market created higher lows right here and right here, right? These two levels, right? Okay, so far we have the bias in the market, but no setups yet. So what are we waiting for? A simple fair value gap to be formed. So if I scroll a little bit lower, you guys will see that finally, after the market took out the liquidity at 828, wait, was it 828? 813. Okay, yeah, we went a little bit higher, but same way goes, right? We took our liquidity right here. We swept liquidity. We started from the MSS, and we formed a very nice bearish fair value gap. So what I told everyone is, okay, we're gonna wait for a nice retracement into this fair value gap. We're gonna wait for a sell-off from the fair value gap, and what we're gonna do right after is simply just do this, right? So we have the fair value gap right here. All we're doing is, when it comes to trading regular fair value gaps, is you want to look for, since we know that the market has room to go lower, at least into 709, what we want to do here is look for a simple retracement into it. We wait for a rejection back down. Once we get that rejection, we enter off the rejection and we target liquidity below. This is known as not an inverse. This is known as a continuational model. For those that don't know, I trade two models under the same strategy, just two different ways in reading it. Right? So in this case, since we know that the market has room to go lower and we have a bearish fair value gap and we're looking for a sell-off off of this bearish fair value gap, all we need to do now is wait for a nice retracement into it, just like this, right? And wait for the sell-off. Now, the market won't always reject off the fair value gap. Sometimes it will reject a little bit higher, which is why I didn't end up taking this trade myself, because I didn't like it too much. But I did put it out, and some people did end up making money off this trade, right? So what ended up happening is, you guys see right here, we went into the fair value gap, and now we're starting to see a lot more selling coming in. So what you would do in this case is you wait for the next candle to go ahead and open up. Look at this, guys. Look at the selling. Right, so what you do here is you enter your short position. Once you start seeing a lot of selling coming in after the fair value gap projection, right, you put your stop loss above, so you're looking at a 20-point stop loss, and then you target liquidity 1 right here and 2 right here. Why do you have drawn liquidity 1 right here? Well, guys, as simple as it is, the market from the bottom pushed up, pushed down, from the bottom, pushed up again. Right, so obviously it's a drawn liquidity level right there. Right, so you would take shorts right here. You place your stop loss at the highest point, or the nearest point where the market rejected from, which is at 816. Right, and then right after, you just let the market do its thing. It hits drawn liquidity 1, and I'm pretty sure that's it, right? Yeah, and 2, right? So this is how exactly the trade ended up going, about 160 points on this. Now, I know it was a quick recap. It took like 5 minutes because it's kind of rinse and repeat. But did you guys understand this? Did you guys get the idea behind this recap? It was really easy, really easy. Trust me, guys. Yes, sir. Yes. Okay, perfect. What about the inverse fair value gap? Was that not enough points? Which one are you talking about? Which fair value gap? Because we have this one, which we didn't inverse. We rejected from it. Thank you, Wavy. Thank you, my man. Do a losing trade. All right, let's do a losing trade then. This is gonna be, guys. This is gonna be the final one because I have to go soon. But let's do one more. Let's do one more recap. All right. To the left of it. Are you talking about this one? Why didn't you take it? Because this fair value gap, it ended up filling it. I'm like, you know what? It looks a little bit messy. I like to trade perfect setups. This one doesn't look perfect, but it can still play out. I'm just not going to take it myself. I'm just going to kind of commentate behind it. Like before the sweep. This one? You talking about it? Never mind. Oh, it's fine, bro. It's fine. Alright, so a lot of you guys have been asking me about some losing trades. So let's go ahead and review one more losing trade that we had. 11? No, this is the one that we took. Yeah. Okay, so I'm going to let you guys choose on YouTube and on Discord. I want you guys to choose which losing trade you guys want me to do. The only losing trades that we took this entire month was this last Thursday and Friday. The rest were all winning trades. So you guys choose. And I'll let you guys know where we went wrong. I'm not going to let you guys, these last few trades that we took that went red, I reviewed them for myself before I did anything. We didn't really do anything wrong. We just kind of got caught up in the chop. So it's kind of unfortunate, but I'll try my best to kind of review it so you guys can understand it. But like I said, there's not much to review. And I'll give you guys my honest thoughts on it. So out of these 3 losses throughout this entire month, 40 days, these were the only 3 losses that we took throughout the 2 days. So I want you guys to choose whichever one you guys want. I'm assuming you guys might want the 40-point one because it kind of catches your eye. But I'll show you guys exactly what I did here. Alright, so the losing trades. Let me see what you guys want on YouTube, guys. Let me know. Alright, let me see the Discord. It doesn't matter. 926. Do the 25%. Yeah, bro. Let me see. Alright, so you guys are saying it doesn't matter. So let's do the one that I think I messed up on, which was gonna be this one, the first one. right? So let's go over to 926 and see exactly what I was seeing and where exactly I messed up, causing the trade to be a red trade. All right, so let's go over to the commentary and see what we did on the 26th, right? Let's go and see the 26th right here. Okay, so let's see what exactly we were looking for and try to get that idea on what the market was doing throughout the day before we took this trade and see if we can read anything, right? So let me go over to the 26th, which was last week, right? Yeah, last week. 26 right here. 26 right here. Okay, then we took this trade. Let's do off open. So yeah, off open, it seems like a pretty weak sell-off right here. So off the bat, it kind of looks choppy, which is a major red flag here. When you guys see price action that looks really really slow and weak like this, trust me, I've learned my lesson a million times. Do not trade this, guys. Make sure you guys are trading markets that look like this, for example. Like this. These are the markets you guys should be trading. Not markets like, wait, where was it? Like this. Do not trade this. Don't trade this. Alright, so anyways. Okay, so let's see what we saw exactly off open before we took this trade to see where we messed up on and what we could have done better in this trade. Alright, so coming into market open, NQ is looking very interesting. On the 5-minute time frame, right off open, we can see that sellers are picking up and created a nice bearish value gap while heading down into a major level of liquidity at 20,435. So if we open up the chart, let's go ahead and see what I was saying here, right? So we have a fair value gap right here, obviously. You guys can see the gap right here. We have drawn liquidity at 435, like I said, and we went ahead and swept this level of liquidity. Now, I don't believe this setup ever ended up playing out, so I don't know if it's a valid one. Hold on, before I waste your guys' time, yeah, no, this setup never ended up even getting retraced into, so it doesn't even matter, right? Anyways, so, okay, let me see. Okay, yeah, so this type of day, from what I'm remembering, I was putting out ideas, but none of them were playing out, and I'm not saying not playing out as we were going red constantly. They just weren't like going into the setup to play out. Like they just kept on going down. Right, so what I said after was now looking at now that NQ took out more levels of drawn liquidity to the downside, we have more of a reason to expect an MSS that we're waiting for. And like I said before, you guys remember, the more levels of liquidity that we took out to the downside or to the upside, the weaker the buyers or the sellers will get, and the more of a chance of a U-turn, which is what I'm gonna call it, is to happen, like a reversal. Right, so here I said look at the 5-minute time frame. We have the same idea as above, which is going to be the same fair value gap one. Right, we're simply just waiting for a sweep off of 20,309.75, then looking for a market structure shift to form with buyers stepping in. If you guys look at the chart, we were looking at this fair value gap above, we didn't see it, so now we're going to go a lot lower. We have a fair value gap right here, and you guys can see that we ended up taking out liquidity at 313. Right, so what are we doing here? We're pretty much just waiting for a nice MSS to form. Do we end up getting it? Nope. So we have to go to the next setup, right? New setup, same idea. You know, it's going to be a long day because it keeps happening over and over and over. But let's go ahead and see this, right? So be ready for a long day if this keeps happening, because the market just kept selling off with no setups. It was a nightmare. Trust me, guys, right? So waiting on another possible sweep to form after we took our liquidity to the downside. If NQ continues to go lower, I'll keep the same idea as above. Just look for a new fair value gap and a new sweep, right? So like I said, guys, once you guys have the idea of looking for a reversal, all you need to do is just wait for the setup to play out. It's that simple, right? Now, what ended up happening is, here's the setup. We took out liquidity at 221. We have a fair value gap here, and all I'm looking for here is a simple inverse. Well, before the inverse, what I'm looking for is an MSS and a sweep to happen, right? Let's go ahead and see exactly how this looked like at the time. So I put this out at 11:02. So let's go ahead and see what happened at 11:02. That made us go red. Right, so at 11:02, which was about this right here, let's go ahead and see. Here's the mistake that we ended up making. Well, it wasn't really a mistake. We just got caught up in the chop, right? So if I zoom in, you guys will see right here that we have the fair value gap after the sweep, which was at 221, right? Let me put this here real quick at 221. There it is. Okay, so yeah, we have the sweep right here at 221. We have the fair value gap right here, right? If you guys measure it, it is a valid fair value gap. I'm pretty sure. I would hope so. Yeah, 64 points. So obviously it's a valid fair value gap, right? So what did we do wrong here? Well, in this case, you guys will see that we ended up getting the sweep that we're looking for because it's selling, selling, selling. We took out liquidity. Now we're getting buying and buying, right? Now, on top of that, we're signaling an MSS because we're breaking new highs, right? So I'm like, okay, if the market took out majority of the liquidity to the downside, we're forming an MSS, or We swept, and then now we're forming an MSS, and we're inversing a bearish fair value gap, and we have nothing above holding us down until at least 366. We have a good trade on our hands. Why wouldn't this work out, right? So I'm like, okay, I'm gonna go ahead and take shorts with a 20-point stop loss, and I'll target liquidity up here for 80 points, right? Hence the alert right here. You guys will see it right here on the 17th, right? When was it? No, it was the 26th. On the 26th, we ended up taking this trade, right? So peep this, guys. I'm like, okay, so we have NQ longs, right? We have the same price target. We have everything aligned, right? Buyers slipping in strong. We're inversing the fair value gap. We have the MSS and we have the sweep, right? But just like how any other good thing happens, not everything will play out in your favor. Of course, this strategy, it works, right? We can all agree to that, but it won't always work 100% of the time, and that's fine, right? In my opinion, I tried reviewing this. We followed our rules. We looked at everything for the strategy. Everything played out fine. It's just gonna be that 1%, or not the 1%. It's gonna be that in part of that percent of the losing trades, right? Because of course the strategy is not 100%. But in my opinion, I feel like we did everything right in this case. It's just that we got chopped up. Because if you guys look at the reaction right after, we got stopped out short, literally a candle after, and then the market just starts chopping up. So I blame the chop on this one. I'm not gonna lie to you guys. As much as I want to take accountability for the trade, which I did, review-wise, we did everything that we always do every day when we win. So I don't see why we got stopped out on this one. It's just gonna be that part of the percent of the losing trades on the strategy, and that's fine. You know what I mean? We managed our risk fine. We didn't lose too much, but we did lose. But we didn't lose too much, right? So yeah, for those wondering, that's how my losing trades go. What's a value gap? It's a fair value, not value, like VALU. Why don't you wait for a close above the fair value gap? Because in my opinion, it's kind of useless. A close doesn't really signify anything. I used to think that it did, but not really. There's been many times where I've entered right as it broke above. Not only do you get a better entry, well, that's kind of the only thing behind it. You just get a better entry. So yeah, every single trade you might notice, Daniel S, that any single time that I alert something, I don't usually wait for a close above. I just kind of just take it as it breaks above. It works the same exact way. A close above is not gonna tell you that the trade is guaranteed, right? Neither will a break above. So why wait for it? Yeah, of course, sometimes you can get wicked, but even with the close above, you could still get stopped out. That's what I'm saying. It's not gonna be guaranteed regardless. The only thing is you're gonna get a way later entry. If anything, the candle can still hit your price target before it even closes, right? So why are you gonna risk the setup for a 5-minute candle close? I might as well just take it off the breakout, right? I've always gone by that, and it's always, not always, but it works out. It works out, right? You guys don't always need to wait for a candle close. If you want to, you could. I'm not saying you don't have, you can't, but that's the way I trade it. How long should I practice demo so I can open a real account? Until you find consistency. Everyone learns at their own pace. Sometimes it might be a month, a year, who knows, 10 years, who knows. But as long as you find the consistency in the market, move on to a live account. That's how I would do it. On the stop loss trade, was it a 40-point fair value gap? Yeah, it was. It was 64 points, matter of fact. Yep, look at this. 64 points. So yeah, it was. So everything lined up perfectly here, and in my opinion, we had absolutely nothing stopping us until 366, which I'm not sure why we didn't see. I really wish we could have seen it, but it would have been a nice trade. But look at this. We don't have any fair value gap here, or here, any drawn liquidity, or anything. The market just randomly rejected and stopped us out. You know what I mean? It's something that you have to deal with, and it happens. You know what I mean? But to this day, I'm kind of confused on what I did wrong on Thursday that I got stopped out. I guess, you know, maybe a little bit of luck. I would say, I don't like to say luck, but you know, I reviewed it as much as I could, and I just didn't see where I went wrong there. You know what I mean? I just got stopped out. I got chopped, and you know. Let me see. Do you use a 20 or 25-point stop loss? Either or. Do you give calls? I do more in mine, but yeah, I do it here as well. I do. I don't do live calls though. I do that in mine and on YouTube as well. But yeah, I would say that's about it for the reviews. Honestly, we got a good chunk of the reviews. Of course, there's a million other reviews that I'm gonna do throughout the week. But for today, let me see. That's a pocket watch. But what was your best month with payouts? Last month, matter of fact. Yeah, last month. You have your own? Yeah, I do. Last month, we ended up getting a 20K payout. It was in this alert right here, guys. 1 second. Let me let this load. It was, I don't know if you guys can see the picture. Right here. Boom, it hit the bank. Right, so 20K. This is my best month I've ever had in my life. But yeah. You like them, bro? Yeah, they're sick, bro. Thank you, Daniel. And bro, EB trades, bro, you're killing it, bro. How can I join? Hey, it's all in my YouTube, so you can find all of the thing in the description of my YouTube. It's all there, my man. It's all there. Here it is. Wait, there it is. It's all on my YouTube. It's all on my YouTube. The description, all that stuff. If you do want to join it. Thank you guys, and same to you guys. My job here is to help you guys get these payouts alongside with me, which we do get. I hope a lot of people get payouts and all that good stuff here and everywhere on YouTube and all that stuff. So yeah, how long have I been trading? 4 years. 4 years and about 2-3 months. What's the difference between sweeps and MSS? A sweep is when the level gets taken out, and MSS is the market structure shifting, like the trend flipping. So it's kind of the same thing, but not really. So technically speaking, if you copy your trades every day, I can get the same. Yeah, that's what people do, matter. Actually, yeah, that's what people do. I have the announcement somewhere here. I can show you guys the payouts that everyone gets. It was right here, right? You guys can see everything right here. It's payout, payout, payout. So yeah, it's people that I teach, people that follow the trades, and all that good stuff. So yeah, and of course, there's a lot more here. I'm pretty sure RP has a profits channel as well, where you guys at me. But here's some more profits from today. Yeah, but I'm not trying into it. You know, you guys can look at that in your own time. Can't wait for bro Carson. We gotta get that, bro. We gotta give you that first payout, bro. We gotta get that. Do you go step by step on live? Yeah, I do every single day. Are the trades you signal only the trades you take? Yes, yes. I only take 1 to 2 trades a day. Do you look for fair value gaps only in the 5-minute chart? No, it could be any time frame. I like to do the 5-minute a lot more, but it can work on any time frame. Let's see. When entering on TradeAway, do you use ATM? No, I don't. I have that off. How can I join? It's on my YouTube. You could look at the description on my YouTube. I'm gonna call you lag. I forgot to ask, what's the difference between TQQ? Oh, I don't know. I don't trade the stock market. I don't know. Teachers messing with my trading, bro. Trust me, when I used to trade in high school, bro, it's gonna be a story to tell. That's what I'm gonna tell you. Could you, in theory, use a strategy for QQQ? Yeah, QQQ and NQ, they're the same thing. So yeah, you can. The same exact way. How long did it take you to get that 20K payout? Like 3 weeks. 3 weeks of trades. Copy trading 10 accounts. 3 weeks. Thank you, bro. Thank you. I don't want to self-promote anything though. So yeah. Is Topstep good? Yeah, it is. It's a good prop firm. Yeah. I prefer Apex though. How long do your payouts take to process? About a week. About a week. How do you copy trade? Oh, that's I'll just send you the video. You can just search it up on YouTube. How to copy trade on TradeAway. What accounts do you have on Apex? 50K. I have a 50K account. That's the only ones that I use. But yeah, I'm gonna give you guys some more time to ask these questions. How do you even follow alerts with options? I see strike and bid. That you have to choose that on your own, bro. That's something you have to choose on your own. Why do you only choose 50K? Because it's reasonable. You don't have to make an arm and a leg to get a payout, and it's the drawdown is pretty reasonable too. So in my opinion, 50Ks are the best one. Do you charge the same you do? No. I do 50. And I have a discount for 30% off, which is called trading. So, of course, for the people on my YouTube, guys, if you guys are interested in joining the premium, guys, first of all, it's the first link in the description. Guys, use code trading for 30% off, guys. 30% off, it'll bring it to like $30, I think, around there. And I can help you guys up with that one. So, yeah. But, yeah, let me see. Where can I get more information about funded accounts and how it works? Bro, yeah, here. I have a whole thing right here on my thing. Damn, the thing is I can't link you these things. Here. This should do your job right here. This should kind of answer everything. Right here. 80% off. There you go, my man. What's the max amount of micros you have ever traded? 20 micros, and the normal amount is usually 10 to 15. It depends on the confidence of the trade. I don't suggest anything, guys. I don't suggest anything. No, bro. Thank you, bro. Rickster, thank you, my man. Thank you, bro. No self promotion or anything. But yeah. But yeah, I would say, guys, what is the 50% consistency rule? Here it is. I have the picture right here. Give me 1 second. Let me go and pull this up for you guys. For those that trade on the funded account, guys, this is extremely important. You guys need this picture. Save this over right here. It'll be right here. I don't do crypto. No. I only do futures, my man. How come you don't have an MF? I don't trade with MFF. I don't do MFF. I only do Apex. I'm not going to suggest you guys something that I don't use. I will never do that. How many funded accounts do you have? 13. Hey, bro, I'll see you tomorrow, EB. Take it easy, bro. Take it easy, my man. I'll see you in the live tomorrow, bro. But yeah, honestly, guys, are you on the road to 20 accounts? I'm going to get them soon, bro. I'm going to get them real soon, matter of fact. Hey, bro, Steven. Thank you, my man. I was searching for Apex. What is the difference between Tradevate and Arithmetic? Do Tradevate. Tradevate is a way better broker, in my opinion. How come you don't use 20? It's too much stress, bro. Yeah, they're all 50k. Hey, thank you, ASM. Let me read the chat. Appreciate you. Okay. Thank you, man. Thank you, SD. Thank you, bro. Alright, guys. I will go ahead and see you guys tomorrow. Once again, guys, if you guys do want to, what's it called? If you guys do want to check out the YouTube, learn more about my strategy, and all that good stuff, guys, everything is all here. What should I use in Canada? You could do Top Step. You could also do Apex. They allow it in Canada. If not, do IBKR. Can I open a funded account on US work permit? I think so. I think you could do passport, but I don't know. I think you can. But alright, guys, I'm gonna go ahead and call it a class for today, guys. It was honestly a really nice review. I'll be back tomorrow because remember, guys, I promised you guys this the entire week. So yeah, alright, guys. I'll see you guys tomorrow. I'll be live trading on my YouTube and I'll be doing the class over here. So yeah, guys. All right. Peace out, guys. Take it easy, guys. Peace out. Peace out. Peace out. And for the people in my YouTube, guys. For the people in my YouTube, guys, if you guys want to go ahead and join the premium with the discount link, a 30% discount link, matter of fact, guys, go click on the first link in the description and type code trading under the monthly, 3-month, or lifetime, and it will apply 30% off. Right, guys? So yeah, I'll see you guys tomorrow in the live trading. Hopefully, we can make some more money like today and yesterday. But yeah, let's go ahead and see. Alright, guys? Peace out, guys.